What's up, guys? It's Dan from Coin Bureau Trading. Today, we're going to talk about the dump after the Fed meeting and what comes next for the crypto market. Spoiler alert, the next couple of days are probably going to be choppy, but the second half of this month is probably going to be bullish, and I'm going to show you exactly why. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So I want to start off, guys, with a quick recap of what I've basically been saying this whole week, and that's that when going into Fed meetings, historically, the crypto market would see a little bit of a rally. Then after the Fed meeting, the crypto market would get a dump. And one thing that I did not mention earlier this week is that, historically speaking, after that basically Fed dump, then in the next few weeks after that, we would actually see Bitcoin rally to new all-time highs. Of course, that doesn't mean that altcoins are going to be rallying to new all-time highs necessarily, but this is kind of like the third part of the pattern, and this part of why I believe that we're going to see a rally in the next couple of weeks. But there's more fundamental reasons for that. For starters, guys, you might have heard that the Fed meeting was actually pretty dovish, and if you're someone who's interested in the Fed, or like, a Fed watcher, I think is what they're called, then I would strongly suggest following Joseph Wang. I'm actually going to subscribe to him here. Joseph Wang used to be a senior bond trader, I think, at the New York Federal Reserve. So when you hear about like QE or QT or the Fed buying bonds or selling bonds, Joseph was basically the guy at the desk at the Fed actually doing those transactions, actually doing the buying and the selling of the bonds. So he knows, all this stuff about the Fed, and his breakdowns of, the Fed meetings are probably the best you can find. And he basically said that, yeah, like this Fed meeting was really dovish, and they did something that he had predicted a few weeks ago, which is that the Fed would start buying bonds again. He actually expected that to happen by the start of November, but it seems that the Fed wanted to wait until their meeting to announce that, probably because they didn't want to cause any panic in the markets. In case you guys missed it, yes, the Fed will start buying $40 billion of bonds every single month starting on the 12th, which is tomorrow. Of course, you've probably seen some people arguing that this is technically not QE, and even Joseph Wang was saying, like, this is technically not QE because what the Fed is doing, like the reason why they're buying bonds, is not to bring down interest rates on the longer end of the curve, which is typically what QE involves. What the purpose of this buying is to basically plug a liquidity hole, let's say, in the Fed repo facility. So basically this this market plumbing, like basically stuff at the Federal Reserve. And as you guys might have heard, the Fed announced that yes, it's going to start buying bonds, actually $40 billion worth of bonds every single month starting tomorrow. And of course, many people have said that this is not QE. Joseph also said this is technically not QE, but there's this concept in macro analysis, guys, and one to remember, it's called a relative change. So basically, like liquidity in the Federal Reserve's repo facilities, basically in the plumbing of the market, liquidity was low. It was basically, let's say, in the negative. And then the Fed, by announcing this, they're basically bringing liquidity back from a negative level back to a neutral level. And yes, it doesn't mean that they're bringing it to a positive level, like they're really trying to stimulate. Because they're bringing it from a negative level back to a neutral level, that is arguably bullish, because it's that relative change of going from a negative to back to neutral. That is actually bullish, if that makes any sense. So that's kind of my hot take on that. And again, yes, starting tomorrow, the Fed will be buying $40 billion of bonds every single month, expanding its balance sheet. Any monetary theorists in the audience would say that whenever the Fed's balance sheet expands, that counts as stimulus, regardless of what the details and nuances are. Anyways, when it comes to Bitcoin, again, the price action, maybe I'll zoom in here to the hourly. Price action was basically exactly what I had been saying all week, that going into the Fed meeting, we would get a pump. We actually saw a little bit of a pump yesterday, lots of volatility. I think I warned about that as well, that during the Fed meeting, we tend to get a lot of volatility, and you kind of have to wait, and especially until the next day, just for markets to calm down and digest what happened. And we can see that after the Fed meeting, we got that post-Fed dump, and we're kind of back to the same level we were here earlier in the week. And I'm sure what many of you are wondering is like, okay, well, has the CME gap been filled at least? Because this is something I was saying, part of the reason that we would see a post-Fed dump is because we still need that CME gap to be filled. And unfortunately, guys, that CME gap, no, has still not been filled. Bitcoin's price fell, I think it was yesterday, down to, I think it was 89,575, but the CME gap is at 8,525. So it was $50 above that CME gap, which means that it's technically not closed, which means that in the next couple of days, we're probably going to see Bitcoin chop, maybe move a little bit lower to fill that CME gap. And I'll remind you guys that the CME gap only counts as filled when Bitcoin's price falls to that level on the actual CME. It doesn't count when Bitcoin's price falls to that level on an exchange like BitGet. But again, in the next couple of days, probably going to get a little bit of chop. But after that, I do think we're going to get a continuation higher. And this is because of the kind of macro, I guess you could say, change that was triggered by this kind of dovish Fed. You can see this, guys, in the Russell 2000. And for those of you who are unfamiliar, the Russell 2000 is an index of small cap stocks in the US. And if you look historically speaking, a breakout in the Russell 2000 would correspond to a massive rally in crypto, especially in altcoins. And what I've been waiting for and calling for, I guess you could say, for the last few months here, even in September, I was expecting the Russell 2000 to really start taking off. But of course, it got a couple of drops here, got a really nasty pullback in October, November, just like the crypto market. But now you can see the Russell 2000 is finally breaking out, you could say again or officially. Of course, we have to wait until this weekly candle closes, but it looks like the Russell 2000 is breaking out. And what that means is that we're likely to see capital rotate into smaller, more speculative assets. And this is especially likely, guys, when you consider what's been happening on the AI front. What's really interesting and what you guys might not have heard about is that Oracle had their earnings yesterday, and the earnings were basically not good, so the stock fell. And the result is that there's lots of pressure on like these AI stocks, and people are uncertain. Is like these AI stocks have basically gone parabolic. Do I really want to be buying into this parabolic pump, or do I want to start rotating my capital into other assets? And of course, when you think about it, guys, AI is kind of on this like whatever is frontier technology, cutting edge technology. Same thing like with crypto and stablecoins and robotics and all these other areas, or quantum computing, right? That these areas are adjacent to AI. So it wouldn't be surprising to me at all that you start to see some rotation out of basically all the capital and attention has been in AI. You start seeing some of that capital and attention rotate into other sectors of technology, including crypto, and even also just into small cap speculative stocks, which again looks like that's what's starting to happen as of yesterday's Fed meeting. And if you need more evidence for that, guys, look no further than the US dollar. The US dollar actually fell here to the Bollinger Band moving average on the weekly. This is huge because we need to see the US dollar fall below this level. If it does, that's going to basically be a continuation of the crypto bull market. But if we get a bounce from this level in the next couple of weeks, then that would basically mean that the crypto bull market is probably ending. And if we get the US dollar to rally above 100 on the weekly, to get like a weekly close above that level, that would basically be confirmation that yes, the crypto bull market is over. But until that happens, and as you can see, the US dollar has basically just been chopping in a range since the summer. And the result is that we've seen Bitcoin on average slowly grind up and to the right, while some altcoins pump here and there, but most altcoins ground down and to the right. And that's basically because you've had this, you could say, like a choppy liquidity backdrop. But if we get this drop in the US dollar, a drop in the US dollar basically increases global liquidity. And that is, of course, supportive of the crypto market. And of course, also small cap stocks and other speculative assets. So yeah, basically main thing to watch here, if we do see the US dollar break below this Bollinger Band moving average on the weekly, which is what I expect going into the end of the month, then that's what would basically trigger a continuation higher in the crypto market. And if we were to see that, if we do see the US dollar continue rolling over rather, then we will see, in my opinion, Ethereum rallying up to this Bollinger Band moving average on the weekly, which is close to 4,000, around 3,900. I would expect that to happen by the end of the month. Same idea here with Bitcoin on the weekly. If we do see the US dollar roll over, we should see Bitcoin rally to the Bollinger Band moving average at around 107,000. And we should see many other, altcoins, especially larger altcoins, rallying up to tag this level. Because from a purely technical perspective, even if we are entering a bear market, Bitcoin and Ethereum and all these large altcoins, they still need to rally back up to this level to retest and confirm that this previous support is now resistance. We have still not seen that retest. So it would make sense from a purely technical perspective to get this rally into the end of the month, and then we can start debating, okay, was that just a bear market rally, or was that, whatever exit pump or, dead cat bounce, whatever you want to call it, and are we then entering a bear market, or are we going to get a break above that level and a continuation higher? We'll have to take things one step at a time. With that being said, one indicator that you guys need to be watching very closely in the next couple of weeks is ETH BTC, basically Ethereum's strength against Bitcoin, because when you see ETH BTC breaking out kind of like it is now, it suggests that capital is rotating from Bitcoin into Ethereum. And if that trend continues, then that capital, of course, eventually rotates into other altcoins. And I'll be doing a video on this kind of capital rotation and where we are in the cycle on Saturday. But one thing I want to flag here is that if you look on the monthly, we can see that the monthly Bollinger Band and the weekly Bollinger Band moving averages are both at the same kind of resistance level. And we can also see that we're almost seeing like a bull flag being painted here on ETH BTC on the monthly. So if we do see ETH BTC get a big break this month or next month, and we get a continuation higher in ETH BTC, this would basically take Ethereum significantly higher, and it's kind of like indicative of more liquidity flowing into altcoins. And as you guys might know, the US dollar is kind of like the inverse, or rather the US dollar is very highly correlated to Bitcoin dominance. So if the US dollar continues falling, then Bitcoin dominance should fall, and Ethereum, let's say Ethereum dominance relative to Bitcoin should actually rise. So there's kind of this interesting correlation there. But anyway, long story short is that in the next couple of days, it's probably going to be choppy, probably a nothing burger. But starting next week, we should start to see, especially as we enter that kind of Santa rally period, period, which is going into the end of the month, we should start to see, especially small cap stocks start to rally. We should see Bitcoin and altcoins start to rally more going into the end of the month. But of course, the main indicator to watch for that will be the US dollar. So just keep your eyes peeled on that. If we do see the US dollar bounce from that level and start heading higher, that's going to be a very bad sign. And you can rest assured I'll be keeping you guys updated at every step of the way. And if you guys are trading crypto, then do check out the link in the description, specifically this first link here, BitGet up to 50,000 USDT deposit bonus. Click on that link. It'll take you to a page that looks like this. You'll notice that the Coin Bureau does have a partnership with BitGet, but on a personal note, BitGet is an exchange that I really like. It's one that I use personally, and it's one that I would definitely recommend. That does not mean that you should be keeping your crypto on BitGet. You should always keep any crypto you're not trading in your personal wallet. But with that being said, it's free, completely free to sign up for BitGet, and they have spot trading, futures trading, on-chain trading, tokenized stocks, AI trading, all these different features, and it's completely free to try out. So, it doesn't hurt. Make an account, see if you like the features that are on there, and if you do, then with some luck, you'll get enough trading volume here to get that deposit bonus, which again is up to 50,000 USDT. Anyways, guys, if you did make it this far and you did find that information helpful, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.